Now, financial inclusion is one of the big topics here on day one of this conference. 2.5 billion people around the world are excluded from the formal financial sector. And we're going to find out what senior bankers around the world should be doing about this. And joining us to discuss exactly this are Roger. I'm going to probably murder your last name, the pronunciation of it. Roger, is it Voorhees?
That's right. Well
Voorhees,
done.
great. Director, Financial Services for the Poor at the Bill and Melinda Gates Foundation. Ruth Goodwin Groen is with us, Managing Director, Better Than Cash Alliance at the UN Capital Development Fund. It's such a pleasure to have you both with us. I want to start first of all, these 2.5 billion people who are excluded from the formal financial sector. Who are these people? Where are they? What countries are we talking about? And where are they located in these countries?
I mean, if you look at the 2.5 billion people who are left out of financial services, 3/4 of them are low-income individuals, with up to 80% of the people of Africa excluded. Now, the size of that number means most of us take advantage of financial services all the time. We have savings accounts to save for school, we have a way to save for fertilizer if we're a farmer, and low-income people don't have that. So it's not just the fact that they're excluded from access to financial services, but it's actually the impact that makes on their lives. So they are around the world, 1 out of every 2 adults is left out, and it actually creates a huge inequality and makes them pay an extraordinary price for those financial services.
So here you both are, the Bill and Melinda Gates Foundation, the UN Capital Development Fund, not necessarily the types of people one would usually find roaming the halls of a Sibos conference. What do you want the bankers here in this community to do? What is the call to action based on the problems we've got?
Well, the biggest barrier to them being included is that all of their transactions are in cash. We know that all those small transactions don't add up to a sustainable business model. And so there's a huge opportunity. If those cash transactions can be shifted to digital, there's a huge opportunity for a new market, cost savings, increased transparency, less leakage for the governments and the private sector and the companies that are doing it, but also for the clients, those low-income people that Roger was talking about. There's a huge opportunity for them to provide a pathway to a range of financial services.
Give us some examples.
Well, I mean, payments are really the connective tissue that makes the financial system work together. And right now, if you're excluded from the financial system, it's because the economics don't work for providers to make those transactions to poor people, or for poor people to afford those transactions. So like right now, one thing that poor people face is they want to buy daily size financial transactions. But for them, they've got to go to a big box store and buy a huge size financial transactions that's way outside of their means. So even if they could afford the margins, they actually can't afford the size of the transaction. And so payments really matter because it's the way they get connected into the larger financial system. The other thing that matters is it's really hard to connect providers with low-income individuals. It's about proximity. So one example is you have a country like Nigeria with 160-some million people, but only 16,000 financial service access points. And yet compare that to a place like Kenya, where they've started a mobile money scheme, which now reaches 86% of households, and there are over 50,000 access points in a country the third the size. So payments matter because they create this interaction for poor people, but they also create the platform through which other financial services can flow.
I was reading about a case in India, for example, where a lot of banks that employs business correspondents that then go out to the rural villages. I think they're called bandhus or something, and they go out and they speak in the language of the people that they're trying to sell the services to, as opposed to this sort of corporate bankers showing up somewhere in the village. So let's talk a little bit about repayment rates, because it's one thing to say, you know, let's offer these services and banks should get involved, and yes, there is huge opportunity for cross-selling, but what about the repayment rates on some of these loans?
So one of the things that microfinance did over the last 35 years was to prove that low-income people can actually borrow and pay back. Now, there were some challenges when there was some over-indebtedness in certain countries, but overall, what we think we found across different geographies that have held really consistently, over 90% of low-income people pay back, and sometimes up to 98%. So the history of whether or not poor people are there good risks, that's really been established. Where the real challenges come in is how we create the other tools they need, insurance, saving services. So for example, there was a study done with the bank I founded in Malawi that was funded by the Gates Foundation. And what it really looked at was, what about just a commitment savings account for smallholder farmers? And so that money went in after the crop got paid, and instead of holding it in your pocket for a whole year, it went into this savings account, and that increased fertilizer usage by, I think, about 25%,
wow.
which had a 17% increase in household expenditure. Wow, that's the difference if you're low income between a dirt floor and a concrete floor, between a tin roof and a thatched roof. So I think that the risk of poor people is more of a risk of not knowing them and having access to them, not a real risk of the underlying economics.
Do you want to come back on some of those points?
Well, I mean, I completely agree with Roger, because I think what we're talking about is developing a sustainable business model that can deal with multiple small transactions. And if they're digital and not cash, then we can have appropriate, affordable products that will serve clients that they will love to use.
Yeah, we talked about some of the barriers, but isn't a large barrier as well the technology for some of the providers? Because a normal bank here, for example, in Dubai or in London or wherever, you're talking about, you know, a few thousand clients, but when you're looking at very high volume, you need a technology because you're dealing with 1 million clients, aren't you? Or more than 1 million clients.
Hundreds of
yeah,
millions.
and hundreds of millions, absolutely. So there is a huge challenge, if you like, with the technology services that need to be provided from in these kinds of countries.
So I think that as we look at it, the Bill and Melinda Gates Foundation, and we have a founder who's very interested in technology, right? So we get a little excited about it. But we actually have sort of 3 criteria for that technology. You want it to be open, so that people have access to it on both the user side and the provider side. We want it to be robust, so that it's safe and secure. And 3, we want it to actually be low price. And we think that we just finished a big study where we looked at about 35 different countries of the world, and we think there are real learnings out there in technology that make it possible to achieve all 3 of those goals. The questions that come out of that is, what does it really take to change the business model to turn from cash to digital to reach these people? And we have a series of questions we're wrestling with, which is, you know, how do we actually make it possible through mobile phones for everyone to have access to a savings account and everyone to be able to send money to each other? I mean, mobile phones, there are 72 SIM cards for every 100 people in the world right now, and 90% of low-income people are covered by a signal. Or what would it take to turn a 30-day sign-up process for accounts, which happens in many countries for poor people, into a 30-second process? And there are great solutions that people in this room are already deploying to make that happen.
Yeah.
So we don't think the real challenge is brand new technology. It's actually pulling it together in an end-to-end solution.
Last year, we had Mohammed Yunus speak at the closing plenary at Sibos in Osaka, and he got a standing ovation from the thousands of bankers that were in that room. And I remember after that speech, I was standing in an elevator with you know, the CEO of JP Morgan in Asia and a few other high-level executives from a few of the other banks, and they were saying, you know, that was so inspiring, you know, but what do they want us to do? Somebody give us a list of specifics, because I think the danger here is when people like you come and chat, people are very inspired, they want to do something, the appetite is there, but you know, they're busy running around doing all the other things, and of course, as you know, financial services industry going through, you know, every problem that there could possibly be and challenge that they could possibly be. What do you need them specifically to do?
The first thing is to understand the market. I mean, it's basic 101 of business is to understand the market. That's why it succeeded in places like Kenya and Malawi that Roger was talking about, because they understood the ways that their clients actually use financial services and then harness the technology to be able to design an appropriate product. You talk to the companies that are highly successful, they've spent their time doing their research, understanding and designing their products appropriately. And so I think if you have a vision for actually serving that market, then the tools are there to be able to do it. It's just a question of deciding that that's your market and that's what you're going to do.
Okay.
My background before the foundation was I started banks for low-income people in Africa and Eastern Europe. And the challenge is that we see as the foundation is it's not just the intensity of wanting to get this done, but it's actually changing the business model and finding the overlaps where technology innovation overlaps with business model innovation. And we as the foundation have seen that happen in vaccine delivery, we've seen that happen in high yielding crops, and that has created a whole new future for billions of people to allow them to leverage their assets in brand new ways. We think that given access to mobile telephony, given access to digital communications that allow us to reach down to low income levels in ways never before possible, we think that overlap is closer than it's ever been. And there are real chances to cut the cost of providing financial services by 90%. And that actually creates a brighter future for low-income people that's more than just a vision. It's actually operationalizable. And we're seeing it in Kenya, we're seeing it in Tanzania, where 47% of families are using mobile money now. We're seeing it in Uganda, where that number doubled in the last 6 months to over 40%. Wow. And even in some of the hardest countries in the world, like Zimbabwe or Somaliland. And so we think that the technology's there, and it's actually the people that are in the Sibos conference this week that have the ability to harness that in brand new ways. So we actually come here pretty encouraged.
Okay, great. Well, that's a great note to leave it there. Thanks very much to all of you, both of you, for joining us.